Morning folks, welcome to today's update video. I'm going to do these a little bit more frequently from now on because we've got a wonderful new media manager named Jesse. So welcome Jesse. And that allows me to do more videos more quickly and the edits will be done by Jesse. So that's awesome news. I want to do a general overview of the markets for you. Yesterday we concentrated on natural gas, so I'm going to go through all of the various instruments that I trade. We'll start with currencies. I've got the majors along the top, the euro US dollar, the pound US dollar and the dollar yen. We're short on the dollar yen. We were short on the pound. We've taken profit near the bottom. I'm expecting that these will turn around at some point. The dollar has actually rallied quite dramatically and probably needs to correct a little bit. However, having said that, we're still around these two paths that I drew in a long time ago. And look at this big structure. We've got this broad megaphone pattern, which probably requires a test for the top and the bottom, or one of them at some stage. But we've also got this channel line that we could approach and this order block above us. Below us, we've got the, 99.5 level and then much, much lower. I don't think the dollar is going to give up that easily though. So I think we could power on back up to this order block here before we reverse and sell back down. That would be a breakout pullback trade. So the breakout is down through that channel line, the pullback to the channel line and the order block. We will be above the moving averages, but that's okay. And then we're looking for a rejection there and a continued move down. Every time the dollar moves up, the euro and the pound will move down. And every time the dollar moves down, the euro and the pound will move up. So it all depends on what the dollar wants to do. If we need to revisit this area, then we should see a continued decline in the euro and the pound over the next few days until we get up to there and then potentially a reversal. All of that is caveated by saying that this has been a strong rally from the bottom. We're holding support on the dollar, and whether that's going to continue or not, I don't know. We've got the 100 and the 200 moving averages above us, and we're at 102.50-ish now. And the top of this area here is about 104.50, so that's about 2%, about 200 pips on the euro and the pound, that we could go either way. We're right in the middle now, diddling in the middle, not much to decide upon right now. However, we are short on the dollar yen, and that's for different reasons. Let's have a quick look at it. Actually, let's have a look at the day chart on this. So a similar pattern on the dollar yen, and generally the trend is down. We've broken this big carry trade, long hold, I think. We got down to the swing low and the bottom Bollinger Band and bounced back up again. So we've taken quite a lot of our profit. We've started to edge back into shorts at around about these areas right now. Remembering that we've got the 100 and the 200 above us and this channel breakout and the 618 fib all the way up here at about 153. I do think, however, that the Bank of Japan will try and keep the dollar under 150. That used to be their line in the sand. Whether it still is or not, I don't know. Obviously, we got way above there quite recently during this year. So is 150 going to revert back to their line in the sand, or are they going to allow us to get up a little higher? I really don't know, but we are short. We've got plenty of space to add some more positions on there if we need to. Just going across to stocks, we're short on the NASDAQ and the S&P. I want to give you these very basic patterns that we've formed. This is the NASDAQ. We had a big triangle breakout, retraced back up to the underside of that channel. That's where we promptly sold at that red arrow. And we're looking for this to move down back to the sort of green line, the broader channel. There are two channels here, the narrow one inside and the broader green one, but probably back down to this order block at about 17,000 and a bit, 17,200. I like the 200s and the 800s. So are we going to get that and trade within this big range between about 17 and 20K, roughly, until the elections and post the elections into next year? I don't know. There are all sorts of indications that, and once again, lots of different opinions on these markets, whether we're going to continue to melt up or whether we're going to have just a gentle correction around about now. We've got war in two major areas of the world supporting this market. Those who think that the stock markets fall off when there's war are incorrect. Generally, war supports the stock markets very sadly. Not only the stock markets, but gold and the dollar too, and the oil price. We'll have a look at some of those right now. So we're short on the NASDAQ, we're short on the S&P, a very similar structure on the S&P. Let's have a look. And then we'll go through a couple of the names after this. So there's the S&P, a much thinner channel and much less sort of aggressive than the NASDAQ. We don't have such an influence of the Magnificent Seven here on the S&P, although they are in the S&P, some of them or most of them. But again, we retrace the channel top. Notice the breakout pullback trade. One breakout pullback was successful on a short, and now we're at the second breakout pullback. We're still below the channel line, even though we're moving higher, which is also sort of confusing for a lot of people. The fact that we're moving higher, but we're still below the channel line. In other words, we've broken that channel, and technically we're in the downtrend, even though the price is moving up. Kind of weird. All right, now we've got nothing on Apple, Microsoft. I'm not going to go through all these names, but we've got a couple of trades on short Nvidia, IWM. I'm looking at Coinbase today. It's an interesting one. I think that Bitcoin still has potential to rally, and therefore Coinbase and all the other dealers in this sort of commodity. So we've got this channel. I'm looking to buy. We're above this 20-period moving average, just curling up, not very exciting. We're into this fair value gap. We've got this channel with a fake breakout through the top into this double top. So I don't know. I think if we break out and pull back, this will probably be the best trade on Coinbase. If we break out, hit that 200-period moving average somewhere up here at around about 202, and then pull back to the top of the channel and then continue, maybe back down to 188, 190, something like that. Maybe all the way back down to 180. So that could be a good one, Coinbase. I'm watching that today. Same with Bitcoin, where we're still long on Bitcoin. Nothing has changed. This is the most boring trade that cryptocurrency traders have ever experienced. The longest consolidation in Bitcoin's history since, well, February this year. We've been trading in this range this whole year, just going sideways across the page, which is pretty supportive, really. We've talked about this in the course yesterday or over the weekend about this time-based idea of stop losses or hedging compared to price-based stop losses and hedging. This is a really good study of that because we haven't reached a price-based stop loss, but have we reached a time-based stop loss? And there's a whole field of study in that. Anyway, so we're long on Bitcoin. We're long on gold, just a tiny little bit. We actually switched to long yesterday because of this consolidation on gold. It may be the wrong decision ultimately, but it's a small position. We still have a relatively hedged position, just slightly angled or weighted to the upside, to the bull side. There's the 20-day moving average on gold. Can we hold above it? I do like this consolidation. It's tried, and we've got lots of spikes and a big bullish engulfing candle right there. And if we can hold this 20 period and this fair value gap down here, gold should have a chance of moving even higher. We have nothing on silver. We have a long trade on platinum, and I'm hoping that we'll hold above. But very similar, actually. We've got this smiley face, but we've got two channels. We've got this very sort of broad channel and then this tiny little channel. These are both potentially bull flags. So first bull flag, breakout, pull back to the top of it. Then we formed another bull flag and broke out through the top of that one too. We're pulling back into that order block and the top of that breakout channel. That's platinum. We're long on platinum. And with a bit of luck, we'll hold there. Now, natural gas we covered yesterday in detail, so I'm not going to do it today, just curling up. I took another 10% this morning, right at this level. And for the reasons described in yesterday's video, I'm not going to go through it. And then Brent crude, we sold our next tranche. Actually, we're trading WTI, not Brent. We sold our next tranche here at the 200-period moving average. And so far, so good. So we have a couple of positions slightly lower than this, and then I need to add one more at the top here. Let's put that there because I didn't do that yesterday. So that's WTI, and we're aiming for the bottom of this channel and even further down below. Let's have a look at this in the expanded view. There it is. And you can just pause this, zoom in into your charts and take off that green dot there, which crept in and is creating a mess. So that's my overall objective on WTI, aiming for around about $60. Maybe below that into the 50s, maybe into the 30s actually in time to come. But we've got some work to do. And of course, with all the war going on in Ukraine and in Israel, Lebanon, Gaza, Syria, you name it, it's putting pressure on the price of oil. But I still think we're in a downtrend. Right, going across to this chart, we're short on the US dollar ZAR, looking to resell. Actually, we resold a tiny little bit there at the flat bottom breakout. Let's have a zoom into this. I won't go into the pound South African rand, but I'm trading that in a similar manner. We've talked about this multiple times. There's the big channel that we broke out. We've got good political momentum for this to move down and continue to move down. But we have broken out of a very, very long-term massive channel, and we're aiming towards the bottom of a very, very long-term, even bigger channel. My TV's just gone out behind me. I can see while I'm talking. It's gone onto sleep mode or something like that. So that's where we're aiming, at about 16 rands to the pound. And I've drawn some squiggly lines in there. Let's see how we go. We got to the breakout pullback of this flat bottom break, and we've rejected. Now we're trying moving back up there again. Let's see if we manage to do that. If we don't hold here, I expect we'll get up to the top of the underside of this channel and then carry on moving down. And that could take us all the way back up to about 18.5, maybe 18.8 eventually if we meander around. This channel line should provide serious resistance for the rand against the pound. And if it doesn't hold here, we should be visiting there. There's the flat bottom that we're trading against right now. Right, now going across to VIX, we're also long on the VIX, and we got long at about 16, just above 16, somewhere around here. I haven't got my arrows drawn in. This is a different chart. We're now at about 21. If this carries on moving up, we'll start to look to take profit into the mid to high 20s on the VIX. We're almost there already, actually, 21.8. So That only opens up in a few hours' time when the markets open. We'll keep a very close eye on that. We're also long on TLT. That's looking a bit weak. Not too worried about that. I think this is a very long-term sort of trade. And as I pointed out, let's try and get this up on a different chart. Let's go to the NASDAQ chart. And there you can see our trade position. We're back to break even now. But overall, I think this is a really good trade. It's just the overnight carry cost that might erode some of your profits. But a very, very long-term trend, channel line breakout. You could draw a channel in there if we paralleled that line. And curling up above all the moving averages, 20. Well, we're below the 20. Below the 50, we're at the 200 and the 100 period moving averages, and we could actually retest the trend line again right down here below our stop loss and remain bullish. If we move down into these levels down here for a breakout pullback, it might mean we have to go even lower than this swing low, but we'd still be above the downward sloping top channel line, meaning that technically we're still bullish. Now, going across to some of the commodities, softs and grains, we've taken profit on our cocoa trade, which was a fantastic trade right at the bottom, right there at that black line. That's my exit point. There's my entry point. I'm waiting for this to retrace back again. There's the 20 period moving average right there. And perhaps this channel breakout area, maybe the 20 will come down and meet us there at around about 8,300 or so. But there's every danger that we could bounce right back into this breakout channel, create some jitters and weirdness, because we know what's been going on in this market. It's not all above board. That could take us back up to about 9,000, 8,800, 9,000. And in the extreme event, extreme case, and I'm going to draw my line in the sand at this last spike high, we could get back up to 9,820. More likely we'll get to the upside or the underside of this channel, wherever that happens to be, if and when we get there. If we do break down through here, I think we'll be locked out for the moment, looking for a bounce back up for more levels to sell into. You've got to take big contracts, 1 million metric tons per futures contract on cocoa. So you've got to have a big trading account, or you've got to be trading the ETFs, which are a little bit tricky, some of them. So sugar, we're long on soya. That's just coming back, and we might add some of that. We've got good profit on sugar, soya, and wheat, all long on those. Cotton, we're hedged, and orange juice, we're short. And I think that's it all, folks. Have a fantastic trading day. I hope that's been useful. So please like and subscribe and support the channel. It helps the channel grow. And it'll also encourage our new media manager, Jesse, to keep doing what he's doing really well.